Hello, welcome back to another episode of real estate investing. And today's topic will be the cost of waiting. And we help real estate investors to buy rental properties. We've done it for a very long time. And we're going to talk about why cost of waiting is a nail in a coffin for a lot of people.
Yes.
So we're going to try to help you overcome those issues and hopefully you can take action and execute on your financial plan through real estate investing. So my name is Seewing Yee from the New Real Estate Network, and my co-host is Julie. Hello,
Good
Julie.
morning.
Yeah, morning. And Julie is one of our members within our investment club here in the San Francisco Bay Area, although she lives in Southern California. Julie, again, she's putting herself in your shoes out there for those newbie investors out there, or even experienced investors that, for whatever reason, are paralyzed by fear and what have you,
Right.
unable to take the next step to your real estate investment goals. And Julie, she have a very late start in her real estate journey. However, she ramped up rather quickly several years ago, and to the point where she had accumulated a total of 6 turnkey cash flow, high appreciation rental properties out of state in
Right.
one of our network markets that we're promoting, which is in Buffalo, Niagara Falls. And
Mhm.
again, Julie's putting herself in. She was out there to just share with you her thoughts as to how she digests information out there in real estate. And once you get educated and get informed, then you will hopefully take action. Otherwise, if you do not take action, nothing positive is going to happen in your financial life. Am I right, Julie?
Oh, absolutely. I'm reminded of that saying Wayne Gretzky said, "You will miss every shot you never take." And so if you don't ever get in the market, you're never going to have the opportunity to experience what we're talking about on this video.
Yeah. Another common Wayne Gretzky, the greatest the greatest hockey player in history, arguably speaking. I think how he achieved success, he escaped to the area where the puck is going to go.
Oh,
Yeah, he anticipates where the puck is going before the puck is going there.
right.
As a real investor, we should practice the same philosophy, right?
Very good. Makes sense.
In advance, you do your research, you buy rental properties in a market before that market gets crazy, right?
Absolutely. Absolutely.
Yeah. All right. So without further ado, let me share the screen. And cost of waiting have a lot of severe consequences for a lot of people. And here we go. It's all about time value of money. Okay. As human beings, we only have finite number of time in our lifetime, right? So
Absolutely.
every day, every week, every month, every year, we do not stay invested. We lose the money, the time value, because investing is about time. Let the money grow. Let the money tree grow. Am I right?
Absolutely. You're absolutely right.
Yep. So here's a rundown of the takeaway for the cost of waiting. And now I know this is a very challenging market. There's a lot of noise out there in the housing market. And again, just so much negativity out there. There's so many people talk about negativity around the housing market, and it's very sad out there. The human being emotionally, they are so weak. They are succumb to all those negative programming, all the negative headlines, and all the doom and gloom, all the naysayers out there. The world's going to an end. There's a housing crash. All the crash bros out there, crash porn. Talk about all those inaccurate information, this and that. It's very sad out there. So if you look at data, if you look at trends, if you follow the right resources, such as our network, our organization, then you can make an informed decision that give you the confidence to take action to achieve your real estate wealth. So with that said, Julie, here's some of my highlights on our video. Let me do a quick rundown. So if you wait to buy real estate instead of buy real estate and wait, here are the potential consequences in the next 2 years and beyond. The consequences are the mortgage rates stay at 7 to 8% for the next 2 years, right? And that's going to be bad for you. And right now, Julie, you and I know, at least within our network, we have some tremendous builder incentives that allow that they're buying down your rates so you can have a much lower mortgage rate, so you can cash flow on a 25% down payment financing of your rental properties. But if you continue to wait too long, this builder incentives may expire sooner than you think.
Right.
Yeah.
Right.
If you wait too long, if the mortgage rate doesn't come down like you hope, like you predict, then you can lose out. And then a lot of people are sitting on the sidelines for many reasons. However, when the signal, most people are followers. Most people,
Yes.
they follow the herd. Okay. There's a lot of people sitting on the sidelines. Some people cannot afford to buy a house. Yes, we agree, because the higher mortgage rate and what have you. Yeah. And however, even when the mortgage rate comes down, it'll unlock the demand. Then potentially we can have a frenzy of buyers coming to the market, and
Right.
that will create more competition. Then we've been fighting hand over fist to buy the limited amount of the supply or inventory of homes out there,
Right.
causing home prices to go up and feeding a bidding war, and you have to pay a higher price than you normally would. So
Right.
now is a great time to buy because you are able to negotiate for this incentives like we discussed, that the home prices are low potentially in the future. So you can you can negotiate for better terms as there's a little bit of a buyer's market, a slim buyer's market. You can get some good deals out there. You get some good deals in turnkey properties. Okay, turnkey properties, you get good deals. Okay, not just other kind of property that other people promote, like Big Pocket. They promote the stupid property. Oh, you get so many good deals. Yeah, whatever. You can get deals buying turnkey properties too, and not just those other kind of properties that most of those coaching programs and gurus out there promoting this crappy houses and buying 30% down, do a BRRR BRRRR strategy, whatever. Anyway, I don't want to digress too much. And if you wait too long, also at the cost of waiting, at the rental homes, the rental property you want to buy that are available right now, those property in those neighborhood, in those fast moving market may be gone. The inventory may not be available for you from the builder or from the seller. Housing prices are most likely will go higher. It has already gone higher this past year, 2023, because we have extremely low historic supply of inventory, and the demand are still out there in spite of a higher mortgage rate. And of course, the cost of waiting we can discuss on the next slide. You will not buy rental property. Buying rental property is very different than buying a primary home to live. Buying a rental property, if you do not buy today, if you wait, you will lose the multi-dimensional aspects of rental home ownership, and they are high. If you buy now, you can have a higher cash flow down the road when you increase your rent. You have appreciation potential. You have tax benefit. You have mortgage debt pay down, in which the renter will be happy to pay down the mortgage rent. So here's the big picture, okay, Julie. I want you to present this because when you buy now, you are making your assets, you probably work harder. So go ahead and go through this slide for the
Oh yeah, this is probably the most exciting part of investing in real estate. And I think initially I shared this before, when I got into it, I was strictly looking for cash flow, which is like the first point. The first benefit is cash flow. So you have this ongoing passive income that you don't have to work for. You do the deal one time and you set it and you forget it. So that was a big plus. But I realized through the course of just working with you and better understanding what we've done in investing and the 6 properties is that there's tax benefits too that are going to be huge because you can write off a lot of these things. You're getting this passive income, but then you could also write off the cost of all the things that make the business work, just like any other business. So I think that's a huge benefit. That's how it comes at the end of the year once you do your taxes. Then you always get the appreciation. And I was actually really surprised with the properties that we bought in upstate New York. We've had all of them less than 2 years, and they've all appreciated in value. So I think it speaks back to one of the other videos that we discussed, where you can have an exit strategy of just getting out when you need to. And then the last one is your mortgage is paid off by your renter. So you've got this passive income coming in. Like I said, you set it and forget it, and then the lender is paying it down. The renter is paying it down, but you're getting all the benefits of owning the property.
Yep, absolutely, absolutely. And of course, Warren Buffett just said that when everybody's fearful, be it greedy, as investors, we need to be a capitalist. I call it capital.
Take advantage of it now.
Yeah, in a good way. You try to help create your personal wealth, and don't worry about the things you cannot control. Focus on your strategy. I know the mortgage rate is high right now. At least there's a lot of people complain, oh, there's no cash flow properties out there because whatever reason. But if you connect to the right people, the right network, the right team, such as our network, there is cash flow properties out there. The cash flow may not be as high as before the pandemic, but still there are cash flow. And yes, you may be able to buy some properties at 7.5% mortgage rate, but you are earning cash flow. That's the foundation of the investment. However, due to many of the markets that we are presenting in Florida and in Texas, we have builder buy down incentives. So, they can pay most of the points to buy down the rate, so you can finance. So you can get a rate of like 4.99%, 4.75%, or 5.5%, 30 fixed rate mortgage, as you can cash flow a lot higher currently. Right. For those rental property, you cannot cash flow that much because of your paying higher rate. You and I already talked about it. You date the rate and you marry the house.
Marry the property. That's right.
In the future, when and if the mortgage rate will come down to 6% or whatever, you can always cash out, refinance your loan, and your cash flow will increase dramatically as well. So,
so I think that might be a good class to do. Maybe one of these future things to talk about the difference, because I don't know that people really understand the impact of 7% versus buying it down a couple of points, what that equates to in the short term and the long term for the investors. So that might be something we can talk about at another time.
Julie, you beat me to it. I know you'll go on vacation in about a week, but we can do one more video before you go on vacation in a week. We're gonna use a property tracker, do a sample of a house. We can do it before and after. We can do buying a rental property with 7.5% mortgage rate, look at cash flow, and then we can project 2 or 3 or 4 years later, we finance at 5%. Let's see what are the numerical difference in cash flow and all that. So
absolutely.
That's what we're going to do. We're going to do some real number crunching in a very simplistic way, in a way that all of you can understand. But at the end of the day, as we conclude this video, the cost of waiting, not just, look, Julie, I've been doing this for 20 years. Do you know how often for the past 20 years, every year, many of our investors within our network, members, and many investors everywhere, they want to wait for the right time. Oh, they give all kind of excuses. Oh, listen, the price is too high right now. I want to wait until the housing crash. I want to wait until the housing crash 80%. I want to wait until the mortgage rate come down to 2%. I want to wait until all the foreclosures were going to hit the market. Look, all those excuses, those kind of things are not likely to happen. It's a wishful thinking. You're not educating yourself properly. So the cost of waiting is very detrimental to your financial health.
Absolutely.
For the financial future. So there's no reason to wait in my mind, because So here's my takeaway. So what is your final takeaway as we conclude this video, Julie?
I think we shouldn't wait. Because like the title says, there is a cost of waiting, and it'll work against you to wait versus taking action now.
Absolutely. That says it all. Just with that in mind, if you receive any kind of value from this video, please like and subscribe to my YouTube channel. And also, if you're not already done so, if you are not already a member of our real estate network, please below the link, subscribe your email. You can become a free member of our listening information. Through your email, you'll receive some free information coming to your email inbox every single week. So you could potentially learn more about it and take action so you can achieve real estate wealth for yourself and your family generation. Thank you so much. This is Seewing Yee and Julie. Thank you so much. And
Thank you so much.
have a nice day and see you on next video and see you on the other side.